We're snorting cap rates and shooting up cash flow here at Deal Junkies. Welcome back to Deal Junkies. Oh, yeah.
I hear you say that. Welcome back. I get excited. It's so exciting.
You just get like a little dopamine
I do,
hit.
Yes.
He started itching his neck. He's like,
we're going to do deals.
Start hitting my veins.
Oh, man.
someone give me a belt.
Okay. We're going to, maybe we'll do a deal today. Wouldn't that be cool?
Yeah, why not?
All right, we'll talk about some deals. We have a very special guest in the studio today, Bob Thomas. Bob is he's the God of Syndication. We came up with that on the fly. Bob is one of our
quote from Gabe.
Bob is one of our heroes. Actually, let me give you thanks for being in the studio and driving all the way from Bend, Bob, to be with us. I'm going to give you a quick intro so you don't have to do it. This is what makes you the God. You are. You spoke at our meetup. So Bob spoke at the SRE meetup. When was this? In May. So those of you that were lucky enough to hear Bob, that was an exciting presentation. Bob is the co-founder of Peak Asset Management. He holds a real estate portfolio, 60. My eyes are going. Lots of millions of dollars, consisting of hundreds of multifamily units and hundreds of thousands of square feet of commercial space.
Dude, you cannot read. That's crazy.
Well, I woke up this morning, I was looking at my phone too much. I think I'm going to need readers now. I'm getting old enough to need readers. He oversees acquisitions, investment management. This is boring.
I'll summarize it for you. So Bob owns a lot of real estate, and he does a lot of deals.
I already summarized it for you. He's the syndication god. He knows how to raise money. He knows how to do deals, and he's a deal junkie, a self-professed deal junkie. So, Bob, today, and I'm in the studio. Dane's here, but he doesn't have a mic. So I'm here, Gabe Johansson. I'm here with Mike Nuss and Trevor Howard. We're going to interview Bob, and we're going to just do a little bit of a deep dive. Trevor's going to want to talk about all the boring stuff, like all the science of your deals and how you raise money and how you do all that stuff. Before we do that, though, we want to get to know you a little bit.
Cool.
And so if you wouldn't mind, if you could just summarize your whole life in like 5 minutes and tell us how in the hell did you become the God of syndication, that would be amazing for us, just so we can start there. Can we kick it off like that?
To confirm, I've never called myself the God of Syndication.
I know I called you that.
Yeah, man. So I have always been interested in real estate. I can't remember really when it started, but somewhere in like the late single digits, like I was 9, 10, somewhere in there. I kind of grew up in a upper middle class family in Chicago. We had a lot of friends who had a lot of free time, it seemed, and they all had one thing in common, and it was real estate. I was like, man, there's like something to this. Now, my parents didn't have shit worth of real estate, but I just thought there was something to it. So it's always piqued my interest. I started doing real estate internships in like high school and college. Ended up studying accounting, getting a couple degrees in accounting in college. I went to school in San Diego and started going down this accounting path, CPA, Big Four accounting firms. And realized that wasn't what I wanted to do with my life. So made a pivot to a commercial real estate brokerage shop, CBRE, selling institutional office properties. Did that for 3 years-ish, and started to see like I've always wondered why brokers don't do more deals. Now, this is a room where that's, everyone thinks that way. But all these brokers, they have access to all these off-market deals direct to sellers. They know all the capital sources. Like, why the hell aren't they tying up these deals and being the principal?
You mean, why aren't they buying deals themselves?
Yeah, why are they just brokering?
Yeah.
And it's always blown my mind. And so we did a couple deals where, the guys we sold these things to, like, they made $60 million on a deal in 18 months. And like the principal through, promotes and stuff made like 30 million to his face. And it's like, okay, well, I think we're on the wrong side of this business. We got like $1.5 million in commissions and he made 30 million bucks and he just followed our business plan. So, that really was like the light bulb. And I was like, all right, I think I need to go on the principal side of the business. So in 2017, we moved up to Portland, and I just said, look, if I'm ever going to be entrepreneurial, it's before I have kids and before, I kind of get that like risk, the brain deal about it just kind of shuts off your entrepreneurial drive. And so went for it, started doing some hard money lending, started a little hard money company or a branch thereof up here in the Pacific Northwest. started doing kind of syndication deals. So helped some developers raise money for the 100-unit apartment project was my first syndication. And from there, we've just been doing JVs. I was listening to one of the other episodes, and you said, Gabe, that you've never owned a piece of property 100% yourself. I'm the same way. Never owned a piece of property 100%.
Partner guy.
Yeah, partner guy through and through. I'd rather do more deals, and the way you structure them, right, is like you get kind of promoted interests in your deals. So I'd rather do 2 deals and get promotes on both of those than do 1 deal and just have a, like not as much levered upside.
That's awesome.
So that's kind of where we are right now, and we really went hard right around the pandemic, starting to buy commercial value add properties. Then we just have a portfolio of about 60% multifamily, 40% retail office. The one common thread is like deep discount basis and like heavy value add.
Is this why Mike Nuss came to you to be a partner on his office tower?
So we have a lot of common. So I have an office background, right? And we have a common friend in Sang Vu who tied up the deal. I actually was the one to say, hey, Sang, here's the deal. Let's like look at it. He tied it up, and then it's just like a kind of collective effort. It's a big enough deal where there's a lot of pie to spread around, and everyone's kind of got their own skill set.
That's cool. But have you done that type of property before?
Yeah, I own some office.
Okay. All right, cool. So accounting seems kind of boring to me. So you're growing up, you want to be in real estate because you think that's how it's going to get you some free time, and then you decide was that like a decision to get a good job, or was that a decision to find your way into real estate? Because clearly it's a helpful thing to have in your background.
It was a decision that was made when I didn't have as much agency in my own life.
Okay.
So my dad is a former CPA operations
You're
guy.
saying he made the decision for you?
Yeah, I was like, Dad, I'm gonna do real estate as my major, and he's like, that's an idiotic decision.
That's what Trevor's parents told him.
Stop looking at my friends, Bob. You need to follow me.
He's like, look, you can always do real estate. Like, go get something like practical, like kind of get an understanding of business. And like I said, not much agency in my life at that point. I was like, okay, I don't really know what the fuck I'm doing. Let's go for it. I got to say, like, it wasn't a bad call at all.
Yeah.
I mean, especially, I don't think like the major was as much of it, but I think the first job out of school, like all my friends who either, went to a large consulting firm, mergers and acquisitions, investment banking, stuff like that. You get a ton of experience working with world-class clients. And I think that's really what it is.
Yeah.
I was working with a bunch of Fortune 100 companies, M&A transactions, seeing valuations of, public companies. My first engagement was an IPO. And so it's just like, you see this like capital market stuff at a very high level.
You got some good exposure.
Yeah, super
early
good.
on.
And then through CBRE, I mean, basically you were cycling deals for 10 years of your career. Just, a ton of deals. We probably saw, 30, 50 billion and like.
You were a broker for 10 years?
No. But I mean, just, you're working on M&A transactions as a consultant.
Yeah.
And then we did the brokerage gig with CBRE for like 3 years.
Okay.
So, yeah.
All right. Cool.
And to touch on that point, world-class clients, like that's what trains you to communicate in a whole different level. And so like working with Bob on this office tower is a really cool experience because the way he communicates to his staff, the way he communicates to us as partners, the way he communicates to all the different vendors that we have to use versus you look at the way I communicate to my staff and our vendors right on the residential side, right? It's very... I wouldn't say rudimentary, but it fits the personality types of the people that we work with in that asset class versus how Bob now has to communicate on a different, and it's really cool to watch. I was also going to say your dad is actually looking back pretty smart. I'd say your CPA background is probably part of the superpower behind what works for you and your partnerships. I remember one text, like the building friends and being part of these things is the best part about real estate. So we're in a group text thread and we're talking about our systems for finances and stuff like that. Bob just throws down, I've got this, and this operating dashboard. It's like a dream I've had for how many decades that I try to piece together. And he's like, oh, yeah, I know everything. I can hit a button, see every aspect of every business I have, and it's all this one functional. So you bring that level of expertise to the table, which is awesome to watch.
Will you build that for me?
I'd like to go back and look at that text thread to confirm how true what he just said actually is. But no, we do have good reporting systems. I think once you start, like we all are entrepreneurs in some regard. And when you start doing everything and you hate about 3/4 of what you're doing. And as you start hiring it out, like, I got a good sense of seeing how a business is built at a very high level. And so you can start plugging people in to take, to basically build what you've seen kind of work in the past. And so, getting a financial reporting manager in place and everything else, that's been really kind of helpful. Like I can do it, but shit, I don't have the time of the day to do it. And so, understanding what you need and then hiring the right people and empowering them, has really been
That's
crucial.
cool. So your path took you from accounting into brokerage, from brokerage, if I'm tracking right, you kind of went in, you said you did some hard money lending, like you started a hard money company? Or?
So I started, my partner, Kelly, we've got a couple kids together. She got a cool job opportunity. We were living in the Bay Area, and she got a job opportunity in Portland with Craft Brew Alliance. They were a publicly traded craft beer company. She was doing corporate strategy for them. I was like, man, I need to do the principal side of the business. The Bay Area, honestly, I mean, it's great, but it's hard to break into like institutional level stuff. It's just, when you haven't done raising money before, like $10 million as a buy-in versus $1 million, it's a big gap. And so Portland was just kind of an easier market to break into. We do a lot of sub-institutional commercial real estate. So, $3 to $10 million purchase prices. So you're not competing with those institutional guys, but the deals is just like it's more of a blue ocean. There's less competition. And so, moved up there, and I just started networking with a ton of people. I probably got coffee with Mike in the first 3 weeks of me living there. But I was getting like 6 coffees a day, just like cracked out from all this like caffeine. And then I saw this job posting, and it was a hard money company based in Denver. And they said, hey, we're trying to set up a Pacific Northwest branch. We just want to pay you to go network with real estate investors. And I'm like, I'm already fucking
that's
doing
what I'm doing.
So so it took a little bit to set up, but I was driving up to Seattle a lot. Seattle's it was a better market for hard money, but ended up hiring a couple people, getting like a team going. My team like materially increased the revenue of the company. A couple years later, the company sold to KKR. And so there was some equity in there and everything else. And so I still work for that company doing the hard money stuff, but my real focus right now is on the asset management company and building our portfolio.
He's humble. Bob and his team single-handedly changed how flipping happens in the city of Portland.
Wow.
They're the first hard money lender that came in with institutional level rates. When I got involved, it was 4 points, 12 to 18%, depending on your experience level. When they came down, everything got down to 2 and 14 and 2 and 10. And then if you have a background, now you're 1 and under 10. If you have a track record, and now you're paying back those loans. And so that did a couple of things. One, it allowed operators like us to expand because now there's a level of liquidity that adds. But then on top of that, it creates a whole shit ton of competition because now you have more liquidity in the marketplace. So that's really cool to watch. But this is a really good segue because one thing about Bob is I don't think you look at real estate as they're assets, but you look at real estate as a machine. I think your lens, correct me if I'm wrong, is debt and business. And so you look at this as an asset class that allows you to leverage significant amount of good, high quality debt, but then you build businesses around it. And not just a business inside of, and kind of where I'm trying to go is usually when people look at real estate, it's like your first level is how do you just create cash flow on a single family property and then cash flow on a multifamily upgrade. But the levels to this is when you realize that you need to stop reading real estate books, you need to stop listening to real estate podcasts, and you need to start reading business books, and you need to learn organizational structures and management and people skills and debt structures and partnerships. And when you see it at that level, and then you start looking at things from a global standpoint, now you're not just changing you and your kids, you're changing your grandkids and family and friends and families. And now you start impacting at a community level. So I'd love to get your thought process around that. 1, am I right? 2, why do you see it that way? Is that a personality thing or is it an impact thing? What kind of drives that?
Yeah, you're totally wrong.
I like to say I'm right when I'm wrong.
So I forget who said, someone has said like, look, finance is just the clothes, or real estate's just the clothes that finance wears. And I think that's like valid. So when I was doing with my background, people sometimes ask me, how do I get into commercial real estate? And I'm like, I don't know. I started in commercial real estate, right? Like look at the path. Like I never did resi first. And so I learned complex capital structures, and we were full stack capital markets. So senior debt, we would get mezz, pref, we would find the operator and like the joint venture, kind of capital provider. Like that was how I learned how to capitalize a real estate deal. But what that didn't teach me was how to buy a real estate deal.
Mm-hmm.
And Greg Pinio is kind of like some people, you can have whatever opinion you want of him. But when I
you love him or you hate him.
when he's polarizing. When I went to his class on seller financing, that kind of like opened up all the other stuff. So I already knew all this like deal structuring and mezz pref, whatever. But then you say, oh my gosh, and here's how you get your own equity in the deal. Plus, then you can use, broker fees as equity and all that. That totally unlocked it for me. So when I don't look at like debt or equity, I think it's all bullshit. Like it's all the same. It's all capital. It's
money.
It's a weighted average
Yeah.
cost of capital across your stack, right? If you're sitting at the top, everything else is debt. Like you got to pay all that shit off, and then you're hopefully getting like the tail on the whip, and it's fat. And so that's the way I look at it all. So yes, and this is how you structure it, what the cost is. I did go into your second point about the business piece. I used to have a lot of personal financial goals, like personal net worth, passive cash flow targets, all this shit. About 4 years ago, I was like, man, I'm going to hit these. That's boring. and so I was like, well, what do I actually want to do? And I wanted to kind of we want to make a company that outlasts like me, something that's going to make like a significant, tangible, positive impact on the world. And to do that, we need to be at scale. And so owning that, like if we can scale to that point, owning that is just going to, by association, benefit me beyond those other goals. So kind of went and pivoted and said, all right, let's look at the company and let's grow a company, because I can't do this on my own to get to the scale that we want. And so then it was, all right, now let's focus on building this company, hiring in the right people, incentivizing them with equity, with, like giving them the opportunity to achieve their goals while working towards a common purpose, and using my business background and everything else, and getting into organizational behavior. And I mean, that's when you start becoming a CEO of a fucking company, that's really what it all relates to, is like, how do you build the right team and incentivize them appropriately to achieve this like collective goal? And it is fucking hard to do that. But that's really yeah, that's where I'm at right now.
Mm-hmm. Organizational behavior.
What is your team?
It's a really good book, by the way. There's a book called Organizational Behavior, blue cover.
I was curious, what does your current team look like? Like, do you have an acquisitions person? Like, what is the whole structure?
So currently we've got like 9 full-time people. Half of them are off-site, but like full-time. Like, so we definitely leverage VAs in our business. But we don't treat them like a VA. Like, they're in the business. They're full-time employees in our mind. We have like, do you guys know EOS?
Mm-hmm.
Traction. So like we follow that. They have quarterly rocks. Like, they're part of the whole, they're part of the organization, right? And we comp them as such. I mean, in terms of like we have bonus stuff and set targets for them. And so there's a lot of buy-in from that, but about half in person, like Portland based, and then half offsite, Pakistan, Philippines.
Okay, that's what I was going to ask about the VAs. So do you have those people finding deals for you and analyzing deals, or how are you utilizing all these different people, and what do those roles
It's
look
all
like?
So we haven't. So the company is an internal property management company, and then like an asset management company on top of it. So kind of 3 legs of the stool of doing commercial real estate deals, right? Or any real estate. It's like acquisitions, capital, and then like asset management. And so I've always been the acquisitions and capital guy. I was just getting bogged down in the execution piece. And so we built a company to effectively like offload the execution piece of those deals. And so that's really what it's all related to, is, a big property management operation, and then like construction management, asset management stuff.
Do you have a stateside person manage the VAs in those departments, or do you have a VA actually run like asset management and take on a lot of responsibility?
So my first employee, full-time employee in the States, Cannon St. Peter, he's awesome. He's like integral to our company. He's now director of operations. He started out as like a property management assistant. He's kind of like running operational show. And so he's kind of overseeing VAs and, kind of running the EOS, kind of taking leadership over the EOS process and everything.
Okay. And then you're still doing acquisitions today? And okay, so you're just mostly talking.
But like honestly, I'd say, like, I've never been a guy to do the letter writing and the cold calling. Like, we've like the office deal. A banker buddy of mine called me and he's like, hey, there's this deal I saw. They were trying to sell the debt. It didn't work. Like, I think you could probably pick it up for like $5 or $6 million. And he wanted to come in on the deal to help with some like weird PACE financing that ended up falling apart. And I was like, well, do you still want to be in on the deal? And he's like, if the PACE thing isn't in here, I'm not adding any value. And so people just call me with like random fucking deals like that, and then we put them together. So whether it's on market or off market, probably 60% on market we purchase and 40% off.
But that's the benefit to having the network you've built.
Mm-hmm.
Those are your 6 coffee meetings a day you're talking about.
Yep.
Like, that didn't just come out of nowhere. A lot of people.
Oh yeah, for sure. And people know that you do deals. And I think what's cool is when you're doing deals in that sub-institutional commercial space, there's just less competition. And so when people see a deal, you're more likely to pop into their head, right? because it's like I don't buy, like I own one single family house and one 1 to 4 unit property. It's my former primary residence in Portland. Everything else is commercial. And so like we kind of have a buy box sweet spot, even though it's like I'm kind of asset class agnostic. It's like we've got kind of a dollar value for a specific reason and heavy basis or low basis, heavy value add.
Can you go into that a little more? Will you tell us what your buy box is?
Yeah. So I'm not, we want to be able to scale to the point where we have institutional capital backing us, and then we can compete with other institutional buyers, right? But right now, they just have cheaper cost of capital, and so we can't compete with them. They also only look at deals like 20 to 25 plus million bucks.
You're talking about on the equity raise, like your pref and stuff like that is less to those investors because they demand a lower yield.
Exactly. So we're not there yet, right? But
because the deals aren't big enough, or what makes it you not be there yet?
So like I have like a buddy of mine runs alternative assets at CalPERS, and I know one of the guys on the Abu Dhabi Sovereign Wealth Fund alternative asset space. I was like, what do I need to do to get an equity commitment from you guys? You need $1 billion. Effectively, like, you know, you need some other metrics, but you need $1 billion in portfolio value.
Oh.
And so that is what we're targeting.
Okay. So you're going to build $1 billion company.
Well, we're building
$1 billion worth of assets in
the company.
In the company.
It's a lot more than $1 billion company, isn't it?
It'd probably be less actually because you're levered.
Gotcha.
But yeah.
Interesting. Wow.
So you're not saying $1 billion of equity, $1 billion
in portfolio value, just to show like a scale, right? And so that's kind of our, you know, like Blackstone is kind of our avatar of the company we want to be. And I know that's kind of like dropping the mic because it's like the biggest fucking
in the world.
Trevor's goal.
Yeah.
Same. You have the same exact goal as Trevor.
Yeah. Well, so the way to do it is you need to get the same money, the cost of capital as them, and to do that you need to be able to go to CalPERS or, you know, all these like these large funds and get their money. So our long-term goal is Blackstone level, where I'm stage gating what I want to do is when we hit that $1 billion portfolio value, get our first couple institutional capital commitments. Do I sell the company? Do I, you know, hire in some more executive leadership and kind of take a step back on the investment committee? Do something like that. But that's what we're scaling towards. Right now we're at like $50 million. Need to basically 20 exit. But what's cool with real estate is as you do bigger deals, you just get more cred and it's easier. Like that 20x is going to be as hard, I'd say, as
the first X.
Yeah. It's like that book. It's such a swaggy title. It's like my second 100 million.
So are you projecting how long it takes you to get there? Do you have a plan?
Yeah. So that's like our 5-year target. It was our 3-year target, but like, you know, we wanted to buy $75 million of real estate last year. We bought 6.5. And so it's just like, you know,
last year that's going to be our lowest year probably.
Yeah, but you also bought $28 million in the last quarter of 22, right? Yeah. So it's all just timing and right. There's just fewer transactions there. Who do you have to become as a human being to own $1 billion worth of real estate? How do you have to change?
Well, I really think that, like I said, it's different. I don't look at it as me. It's the company. And so I think it's all about building an organization that is aligned on the goal and is all kind of pulling together. I want to take myself out of it. Like, you know, at the end of the day, you know, I just want to empower the team to be able to get to that goal and if everyone aligned. And so that's really like who I'm trying to become is like a good.
So what I hear is like an omnipresent leader. So you need to replace yourself and still give them leadership without holding their hand on a day-to-day basis.
Yeah. I mean, like, you know, there's different parts that I excel in doing that I like to do. Right. But in terms of the execution piece and stuff like that, I mean, if there's a business, but like I want people to be empowered, and Cannon is a perfect example where there used to be a lot of questions and now he just he has ownership in the company now because he's earned it. Like he literally, like he's employee number 1 and he helped us scale to where we are. He fucking deserves it. But like when you take an owner's mentality, and that's why, you know, we're trying to figure out equity structures for all of our employees to get little pieces in these deals. So we're all kind of aligned. It's all about aligning incentives. And so that's really, you know, what you ask, like, what do I need to do to change? I really think I need to keep the company on track, you know, and keep kind of that organizational vision aligned.
How do you give people equity? Like, is that a plan coming in? You let them know that they have a written plan to how to get equity, or is that something that just over time, if they earn their way in, you guys carve off a piece for them?
So with Canon, it was more carved off, but we discussed it at the beginning, like, hey, long-term vision here is if you can help us grow, we do it. I think we're trying to formalize a plan for like the rest of our employees, where effectively like a small piece of the GP goes into an entity that is effectively, like, you know, shares go out to the employees.
a fund for the
For the
employees.
yeah,
Yeah.
the GP.
And you're talking about a deal specific then ownership, not ownership of your operating businesses, but a piece of the GP for the real estate. Yeah. That's the exact vision I've got for my staff on the commercial side. Seems like the easiest way to get them involvement without complicating tax returns and a lot of BS.
Mm-hmm.
I want to go back to the EOS thing because we literally have the same exact goal, but we did it on a 10-year plan.
Tell us what
5 years.
EOS is for everyone listening who's going, what's EOS?
Employee operating system or entrepreneurial
yeah.
operating system. It's from this book Traction by Gino Wickman. It tells you like how to run a business, how to build a team, and basic systems you can follow.
What's the coolest part I think about the book is there's so many books that are like theoretical and this is just like so practical. It's like a fucking handbook. It's like, here's how you run a like weekly meeting, and here's like what you do on your quarterly stuff. Like it's there's no theory. It's all fucking practice. And I love those kind of books because it's just like, just implement it.
Mm-hmm.
Like stop thinking about anything else. There's nothing to think about here. It works. Implement the fucking book.
Yeah, I love that you said that, and Gabe looked at us because he was calling us bullshit for running this stuff at the beginning. Now he's heard people like you say it enough where he's like, okay.
I've seen other companies put this into practice and like explode. Multiple companies. And so that's why, like I saw the results and I was like, oh man, I think we need to do this too.
The other aspect that Traction introduced to me, I think so many books miss, is there's the other component to it. There's how do you run a business with all your meetings and systems. There's typically a visionary and an implementer. Is that what they call it? As an integrator, right? And most of the time those are two completely different skill sets, but they have to know how to work together. And then book number 2 is Rocket Fuel.
Yeah.
And that's where I got so excited about businesses. And in fact, when going back to the business conversation, when I went from, okay, I have to be a property manager, I went to a mentor who was a person I admire and said, I don't know how to manage people. What should I do? He recommended Traction. But what got it for me was then Rocket Fuel. And how does a visionary and an integrator work together in a way that can create the culture top down through the organization, build support from the bottom up, and that ecosystem together? Because that is the most difficult relationship to have, in my opinion, of running a business. Is how does the visionary who hates details, hates to work, hates to get things going, communicate it in a way where then the integrator can take that vision and speak life into the organization?
And I think, kind of you hear people talk about how they, need to see something to believe it. Like, lived experience. It's a lot easier to understand something when you've lived it. Like as a visionary, which I would assume most of us have at least a part of that quality, it's hard to understand how someone likes to be an integrator, and just to believe that someone's out there to find that person. Like, man, that just takes like belief and a lot of searching. But we found that in Cannon, and he's definitely got like visionary qualities. But he is just so good at the execution piece, taking accountability, getting everyone like kind of aligned on a goal. So like they're out there. It's just literally like getting out of your way and finding it, and kind of, starting to, as you build a company, right, starting to bolster your weaknesses with other people.
Yep. And they're such matching skill sets. Someone that doesn't want the details, doesn't want that, wants to be a face, wants to be charismatic, versus I don't want the risk, I want structure, I want to operate, I want to be behind the scenes. It's a perfect match.
But going back to the $1 billion in 5 years. So we wanted to do it in 10. So I love hearing you say you're going to do it.
He said 3 at first.
It was
5.
3, dude.
Insane. But do you have to stay at 3 to 10
No,
$1
you
billion
got to go
deals all the way?
bigger.
Like,
he's got to go bigger.
paint this picture so I better understand your plan to get there.
We're gonna have a competition to see who gets to $1 billion first.
He's got his notebook open. He's taking notes. So I think there's kind of 3 tiers to capital raising, right? And it kind of starts out with syndications of high net worth. You go into small institutional kind of money where you're getting larger commitments from family offices and things like that. And then you hit the true pension fund, sovereign wealth, institutional stuff when you hit like $1 billion. So we've already started having conversations with family offices, a couple out of Toronto and LA and some other places. And so that's really, kind of that next step is the syndicating is nice, and you can typically structure it right where it's more profitable to you on the deal by deal basis to do high net worth syndications. But you can do more deals, your cost of capital goes down a little bit, etc., when you start working with those small institutional family offices. So that's really that next step. I still think that, man, I mean, if you can buy a $10 to $15 million deal, especially if it's value add. So the way I count it is cost basis until stabilization and like until like a refinance capital event. And so, that $6.5 million deal we bought, it was a $4.5 million purchase. We've got $2 million in rehab that's funded into a loan. It's probably worth 10 though. And so I'm not counting that 10 until we hit refi, and then it'll jump. But so if you buy a 10 or 12 million buck deal that's worth that, all of a sudden it's worth 20, and you know, I think we can stick sub institutional and still hit that $1 billion.
Is your buy box though going to change? Are you going to have to say we only do 50 million plus at some point?
Yeah, I'd say like that will come. I'd say it's probably going to be like a 25 mil floor when you hit true institutional size.
Family office even?
No. I think family like family offices are cool with smaller, like you know, smaller-ish deal sizes. Not like $1 million, but if you're like in that 5 to 10 to 15 million buck range, you can structure stuff that works.
Okay.
How much are you typically able to take of these deals, and what kind of return are you having to offer to partners?
It's kind of changed a little bit over time. The way we've always done it, and this helps us because we have an operating company, you know, that gets management fees and everything else. We do an indefinite investment horizon with like a commercial burr structure. So we say, hey guys, we don't know if we're ever going to sell this, and if we do, we might 1031. But what our plan is to get as much of your capital back as possible in like 2 or 3 years through a refi, and then hold it to perpetuity until it's a good time to sell. I'm going to force you to become wealthy over time. Like that is like literally how I pitch it, and it works. So usually, like I don't like IRRs because it so much is pushed based on the exit value, which I think is a bunch of bullshit. You know, people putting like 4K, like.
It's the most easily manipulated number out there.
I think the coolest number to look at is post liquidity event leverage cash on cash return.
Post liquidity event cash on cash after everybody's got their money back.
After you've done your refi, how much money is still left in versus the cash flow you're getting?
So you try to get all their money back and tell them they have infinite returns?
Or, you know, you put in 100, you're going to get back 80, so you got 20 in it, and you're making 10, you're making fucking a 50%.
So,
post
playing on house money.
Yeah. and so that, you know, but if we have this 1 to 3 year value add strategy, it's like, yeah, you can look at the IRR, everything else, but if our plan is to take those proceeds, give them back to you, and then redeploy into something else, let's just have you thinking how much money is left in this thing and what am I actually yielding on that. And
I like that.
Yeah, because then you can just do it forever. You say, look, you're getting 50% on your fucking money. Go sit down, and we're going to keep doing deals and making you more wealthy.
Mm-hmm. Yeah. So do you think it's harder to find all the capital for these deals, or to find amount deals to get to
I think the deals are the hardest part. They've always been like the capital's never been an issue for us. It's always been finding a deal worthy of investment.
Interesting. Yeah, I love this. We'll dive into more of this at lunch too, because
are you
so many questions
when you're doing that that liquidity event? Are you earmarking that capital for future deals, or you're always focused on trying to recycle that money again?
I think you're always talking to your investor base and seeing what their needs are, how are they change. I mean, you know, like when we first started out, we had 3 different kind of like deal types, and one was like tax efficient, you know, using bonus depreciation and you know, being a real estate investment professional, you know, from the eyes of the IRS and everything. I don't give a fuck about that anymore. Because, like, you know, we bought like a couple car washes, like super depreciable assets. The numbers are great, but like, I don't, like, it just doesn't excite me anymore. Like, you know, you get to a point where it's like, I'm going to cut that out. We've found our niche in terms of like deep discount, heavy value add, like mid-sized commercial deals. And so, you know, working on this, like these tax plays for a very specific type of investor, it's like, no, I'm cutting that out. But over time, you know, you kind of develop that. So.
With the heavy value add, do you have a partner on your team that specializes in that? Because that's a hard thing to do for most people diving into it.
Yeah. So I partner with Sang on majority of, I mean, I'd say I've like 3 different capital buckets, but a lot of our recent stuff on the commercial side, Sang and I have kind of been co-GPs, or like JV partners. He like I have an in-house architect, and construction manager.
Those are on salary for you?
Yeah. Well, I mean, one is our architect's based in the Philippines. It's awesome though. Like I can like, hey, do some drawings and she'll like, you know, put stuff together. It's great.
Do they know the code over here too? They just read it all and they figure it all out? No, that's sweet.
And you know, I mean, there's international standards for commercial construction, right?
Mm-hmm.
And so, you know, they're taught all that. So am I using her to submit like, you know, ground up development, like plans to the city? No. But is it a good way to say, hey, here's like a floor plan, like show me like 6 options to cut this up, or like, hey, we're restriping this parking lot, make sure it's the code, and like give me 6 options, like something like that. Like, yeah, then you get it in like 3 days, and it's great. So we have that, and then Sang has a he's like glutton for punishment. He does a ton of single family house flipping. I do hard money lending. Sorry to all my hard money clients. I find single family house flipping to be boring as fuck. And so like for me, it's just like a lot of time for nothing. You just work your ass off and then you pay a lot in taxes and like it just sucks.
See, he doesn't like the actual properties.
Yeah,
I relate.
But Sang loves to do that. So he's got like a crew that he just has running all the time. And so, we'll do a deal together. Sang is amazing at negotiation and amazing at like running his side of the construction crew. So, he does a lot of like the residential kind of finish work. Doesn't like we'll run kind of the other trades under our side of things, and then I'll do a lot of the capital side and deal structuring. He'll come in and help with the acquisition. So it's just like a good partnership that has worked so far.
How does Sang have enough time to do that? Because I met Sang
I don't know.
when I was an engineer, and he had a company at my engineering company outsourcing all.
Oh, he still does that.
Yeah,
That's his biggest source of capital. That's why he buys real estate, is to offset that.
He has partners and everything, right? I think like a lot of us have found that if you split up the pie, it's like very accretive. You can do like 1 + 1 = 3 type shit, and I think he does that a lot of stuff.
Sang's one of the best quarterbacks I've seen, right? So that's his level of operation.
I thought Tom Brady was the best quarterback you've seen. But...
No. It's funny because he's very charismatic. He's a short Vietnamese. I was going to say that. Yes. Okay. So short Vietnamese guy, really charismatic, doesn't speak. He's really uncomfortable about how his level of English. I can't get him on a podcast. Can't get him on a panel.
Get him on.
We're going to get him on. But he always makes you smile, always makes you happy. He always empowers you. And then you look at his team, right? So he has really good partners who then are the implementers in his vision. And then he kind of shows up. He makes you feel confident. He makes you feel good. He helps you see the vision. And then here's what your part of it is. Does that kind of make sense? And then he rallies people around that. And he is a glutton for punishment. He likes to flip houses, but
I mean, so many fucking house flips. Like, I do the hard money side, so I see most of his resi deals. I mean, dude, he's all the time. And we have anyway, it's just ridiculous. I'm like, dude, just you would have so much more mental capacity if you just focus on commercial.
Why are you still doing hard money loans?
I built the team out, right, and so it's pretty low impact.
Bob doesn't do shit in that company.
And
I've gotten how much money from you and never once spoken to him.
But so built the team out, and then like I said, we had the sale event, and there was some kind of equity stuff in there. So yeah.
Does it help you in finding investors and stuff?
It used to.
Okay.
I think that now it's just like it's a low impact way to kind of stay involved in the real estate scene.
Yeah.
Low impact for you, but more impact for other people.
Yeah, I mean it's a positive impact. It's a low intensity way to make a positive impact in the community.
That's a good way to frame it.
I love it.
I was curious too, the life cycle of like these investors from when you first talk to them to when they actually start investing in your deals with you. Because we started like we're just raising money now for the first couple deals. We never really raised any money. And the amount of people, like time it took to talk to them from day one to when they finally feel comfortable, it's been like, I don't know, how long, Dane? A year, 9 months? I don't know. I was curious if you experienced the same thing or how quick they turned for you.
No, so the first deal I raised money on, I basically came in to help raise money, and I know that's like a securities thing, but we legally structured it appropriately, and I was like working on the deal post the raise and everything else, so it was fine. But I came in to really help with the initial piece of it was the capital raise. But it was a permit ready ground up project. So the developer had bought the land in cash, had entitled it for 100 ground up units, and was basically trying to raise construction equity. And that's where I came in. And so it wasn't like trying to develop these relationships. It's like, we need to raise like $4 million to go and do this deal right now. Start turning over the couch and finding fucking pennies and, groveling in front of your fucking uncle and asking for every referral possible. So like, it was a lot of friends and family, a lot of referrals. It was a yes, like to go through the fucking phone book and don't be shy. So I didn't really have time to like cultivate those. Since then, some of those have returned. A lot of our investors are repeat now and referral based. So like I said, we've never really had like the issue raising capital. It's always been about finding deals worthy of investment.
How did they trust you on the first deal? Because you had never done a deal yourself, and then
I think it was because I wasn't the main principal, right? And like the deal was already there. Like the only risk was like the entitlement risk was out of the development. It was permit ready. There was the GC was in on the equity. Good name GC. It was like You build this thing, you lease it up. Now we got out of the deal, but they got C of O in like November of 2019. So leasing was kind of a bitch because you're like leasing right up into COVID.
At the end of a delivery cycle.
Yeah. So that was challenging. But I mean, in general, the trust factor was like, look, it's a fucking construction project. You lease up some resi. Like, that's all. It was pretty straightforward.
It's almost like a three-legged stand, just like everything else, right? There's the deal, there's the relationship but it's timing as well. Like, that's the other component is you can build relationships, but if it's not the right time for them and you don't have the right deal, like, you have to have all of that as well. If you have the right deal and it's the right time, the relationship matters a lot less.
Well, and after you've shown your investors a round trip, I would imagine it's a lot easier to raise money. Now you have a track record. Now you go out. I'm part of a few different syndications, and when you first start out, you're going to friends and family, and then you get a track record, and then you can kind of go out, spread your wings a little bit, do some other stuff. Then you come back and you do a refi event, hand them their money back. You still own the property, and you got all your investment.
And then
back.
they want to give you the money.
They want to give it right back and go do another one. Yeah. And then people start to see that track record, and now you build and build and build. It's not transactional. It becomes more relational because those investors come in, and if you do a good job, everybody's going to want to make more money. It's just going to be, let's go into bigger and bigger and bigger together.
When you refi them out, do you adjust the ownership percentages, or do you leave it as it was when you went into the deal?
So we structure how the promotes work and how they crystallize up front. And usually there's there was a deal where I was underwriting, you were going to get a 16 IRR just on the refi, and then you're going to hold the property. And so the way we usually structure it is like they have a pref, there's return of capital, kind of pari passu with the ownership, and then after that there might be a couple waterfall hurdles based on like an equity multiple or some form of like IRR or something like that. That when it hits, the promote crystallizes. And so in that cash out event, like, we didn't hit it, but we had an extra 10%. We're a year out because of interest rates, so like we haven't refied that property yet. We're not going to hit our 16 on that deal. So because we didn't refi soon enough because we couldn't
because the rate, yeah. So it didn't stabilize soon enough before rates went up, is what you're saying?
I mean, we bought it in December 21.
Oh, okay.
It was still a fine deal. We bought it for $125,000 a door. It's a fine deal. It's cash flowing like crazy. We got a 3.3% 7-year bank loan. Like, we're good.
You just can't refinance equity.
Yeah, we just can't refinance. Yeah. So we can't refinance equity, so we can't get some of those promote hurdles to clip in. But we put in the GP put in like a 15% stake in capital. We had a 51% ownership interest just naturally out of that after capital was paid off pari passu. And then if we hit a 16 IRR on the refi, we would get an extra 10% bump that automatically crystallized. So that's gone, but we still own 50%.
When you say crystallize, what does that mean?
That means like once if they get their 16, we get an extra 10%. Okay, and it stays there. There's no like.
And then the waterfall's gone for the next round.
Yeah, that's the end of you're at the end of the waterfall.
I see. So then, but they still
sale.
Yeah,
but it'd be a 60-40 split on the sale. Like,
right.
We're at the end of the waterfall.
But to Trevor's question,
money's been returned.
They still own the portion that they owned going in, but your promote is over at that refi event. At least the bonus part of the promote.
Well, no. That's when the bonus clips in and crystallizes and stays.
Okay.
Yeah. So like from then on, if I like, so right now we're at 50. Well, once the return to capital happens, we're at like 51% and 49% for everyone else, right? But like if we had hit that 16, we would have been 60-40 into perpetuity. Cash flow, and you can, we split cash flow sometimes differently than the capital event distributions. There's a shitload of ways to cut up the pie. At the end of the day, I want my investors to feel like in a push or like slightly good scenario that they're doing great and I'm doing like whatever. And then in an amazing scenario, they're feeling awesome, but like we make a shitload of money.
Yeah, that makes sense.
Yeah, I mean, it makes sense. Your investors want to know that you're incentivized to do a good job.
And so, but what's nice is that incentivizes me to sandbag the shit out of their pro forma, right?
Yeah, you're conservative going in.
Super, and everyone's stoked on it. They're like, oh my God, a 6 cap in a 4.5 cap market on your exit? Like, are you crazy? Like, yeah, I want to invest in this deal. Like, I hit these returns with that. And it's like, yeah. And then when, it actually hits, you get a little bit more and I get a ton more. So it just works. They feel more comfortable. We end up like, hitting our pro forma or outperforming like most of the time.
How much of your day is spent fundraising?
It's really like when there's a deal that is at that time.
Mission critical.
Yeah, it's like, because I mean, you're always talking to your, or you're doing the quarterly reporting or having update calls, and you're always like seeing where they're at. But in terms of like hardcore fundraising, it's like, hey, there's a fucking live deal. We need X amount of money. Like, I'll have the PPM done in like 3 weeks, but here's the general numbers. Like, what are you thinking? I mean, that's like that's a mission critical kind of event.
Gotcha.
Have you lost on a deal before?
Lost money?
Yeah.
No. We've never realized the loss. There is a deal where if I sold now, we'd be in a loss position. But yeah.
But you have long-term fixed rate debt. So
we have long-term debt. We also just have like long-term equity partner who, we both kind of understand. It's a project that didn't, and if you were going to ask me about like a project that went sideways, this would be the one I would tell you about. But it's a project where we bought it for a development site, and then and it was getting rezoned. It got rezoned. We bought it as a 9-plex. We were going to put 80 units on it, and then the partnership kind of got cold feet around recourse construction debt to build the 80 units. And so it's like, all right, well, instead of doing that, let's go and value add a 9-plex. And so, when you spent all the money on the entitlements already and everything else. So it's a fucking push because of that.
Yeah.
And probably a little loss if we sold, but it'll be fine.
Yeah, you're paying. I mean, you pay for that pivot. It's there's a lot of money that goes into entitling 80 units
and emptying out the building in order to get ready to do it.
What is that? 300-400 grand?
Yeah.
Yeah.
No, I guess it's fine, but I mean, like it was nice to say you've never realized the loss, but to be real, like if we sold that, we would take about.
You could still do 80 units later, and you've got the design. You'll have to redo some things, but you haven't lost all that.
We'll be able to put like probably 45 or 50 on now because we're keeping the 9-plex, and Yeah.
So you'd have to redesign all that,
which is fine. Like we have designs for 2 back 25 plexes, and then there's some parking considerations and stuff. But yeah.
Does your in-house architect do a bunch of that legwork then too?
A lot of the initial stuff, yeah.
Oh, that's so sick. I've never heard of this before.
It's
so
great,
cool.
dude. And they're right on Upwork, man. But like what I've found is with all VAs, I hire them full time. Even if I don't have enough work for them to be full time yet, I hire them full time, start giving them work. They're so cheap. It's like why would you have the flight risk by giving them part-time work and then them bouncing?
How much does an architect cost?
Like for her architectural work, it's like $10 an hour.
Wow.
And for her project management work, it's like $8 an hour.
Wow. That's so sick.
Does she have any friends?
Dane wants to know where we find one of these.
Honestly, just like I was talking to McCleary recently, and I was like, dude, you should. We were saying what he needed and everything else. You should get this. Like go look. And he was like, oh my god, there's so many like architects on Upwork. Like just fucking try. Right? And it's like $8 to $10 an hour. Like who gives a shit if it doesn't work? Like
I tried, but then Gabe told me not to. He said you gotta get stateside people.
I did not.
So we'll rehab this conversation, Gabe. Going backwards to that first deal, I want to talk more about the transition. So you raised money for this first deal, kind of got your feet wet with it. What did you do next after that deal?
I flipped a couple houses with a couple of my capital partners from those deals. And
Sang.
No, Sang wasn't. Sang was. I was doing a lot of hard money lending to Sang at that point. We hadn't like partnered on a deal yet. But I basically like started to use some of those relationships and deepen them through some quick like flips. And I've never been good on the construction side, so I was trying to find good construction partners to bring in. And so I was bringing kind of test construction partners. We were splitting equity, seeing it all worked. Did that a few times, and then just started to kind of grow it from there. With some of those partners, we bought some other multifamily, started partnering with Sang on a couple things, some ground up development projects with another partner. So it just started to kind of build.
Okay, so you were just getting your feet wet in all sorts of different investments after that.
Yeah, I mean, like it was really like I was still hot on the ground up stuff because I had done that 100-unit ground up project, and it was still like 2018, and ground up was a hot thing. But as we started buying more existing assets, I like the risk profile around in-place cash flow, and the debt you can get on it, and it just all that made more sense to me. And so we started to pivot more towards that. But it was really just like, we had done this deal, we had returned our capital. Let's deepen those relationships and try to kind of, keep doing more deals just to build cred.
Yeah. And then when did you have peak asset management that you guys?
That started like right around the time when I started doing my first couple deals after that 100-plex. So like we bought like a property in Eugene and another one in Portland. It was like 15 units total. Started peak like simultaneously with that to do like the property management and all that stuff.
So what did those deals look like?
They were both, well, one was that development 9-plex 88
Oh, okay.
deal.
Yeah.
So that was one, and then there was a fiveplex in Eugene on Pearl Street that we converted into a 6. It was a value add deal. My partner was 1031ing, and it's a great deal. It's a little cash cow down in Eugene, and it's super management light. I mean, it's our only property in Eugene, and I might go to Eugene once every other year. Like, it's great.
Yeah. What was that like taking, like, because you were doing a 100-unit project and now you're doing like 5-unit projects? Did you feel like you were taking a step back, or
No.
you owned more of the deal, so it made sense?
Yeah, I mean, like I said, I kind of came in as like a co-GP,
Yeah.
like a promoted LP on that other stuff. So it was more like kind of getting the syndication experience and everything. But I've worked at that institutional level. I mean, we were selling $3 to $5 billion a year in office product in the Bay Area. So like, it's all fucking zeros. Like, it doesn't matter. In my mind, I think that for where we are in our growth and where I want to be, like, that sub-institutional product type is the sweet spot. Like, you are finding individual owners, non-institutional owners to buy from. You can get more creative with deal structure. There's less competition on the buy side. Like, everything about it is fucking perfect for what we're trying to do and how we're trying to scale.
Sorry, I cut you off, Mike.
Oh, no, you're good. What's the difference between property management and asset management?
So property management is kind of like day-to-day tenant relations, property upkeep, etc., and asset management is like more driving the business plan and the vision of the project, especially in like a value add project. I would say that the beginning stage, if it's like a value add apartment, there's a lot of hand holding between property management and asset management, and then it kind of becomes a property management gig when it's stabilized. On the commercial side, or on a heavy construction project, it's much more asset management intensive up front. And then it kind of transitions to, or, especially if it's like a commercial leasing play or a commercial, redevelopment site, there's just no tenant to service to that point.
So at the syndication level, property management is the vendor, and then you're, as a GP, the asset manager.
Well, we're both,
Mhm.
but
Well, you hire your management company,
we're kind of we're kind of a vendor to ourselves.
Mhm.
And it's really pretty incestuous. It's not like we have like everyone kind of works together on the team to do both.
Mhm.
But yeah.
And then how do your investors look at that aspect of, hey, I'm a GP, I'm promoting this deal, I'm also going to hire my property management company? Do they see that as a good, a negative, a neutral?
Yeah, I think everyone sees it as a good thing.
Mhm.
I think that it's all
You have
about,
more control.
Totally. I mean, it's just all about aligning incentives. How you put promotes together, and how distributions work, how people get paid on performance. If like it's a big leasing deal and you have like a fat leasing incentive where it gets paid out when you hit 90% occupancy instead of getting paid out pro rata through it. Right? It's like they're willing to pay 110% of the leasing fee, or they feel more comfortable doing that if it's all bucketed at the end after the work's done. Right? So it's just all about how you structure it and align it and pitch it.
I got a question for you on like being a visionary and recruiting people, because it's all obviously a people business. We have a shared contact. They're in my phone because Bob gave me the contact information. It says Alex, future MMT employee. Right. So this is beautiful. So I had him on the golf course yesterday because I don't talk to you about loans. He's the one who gives me the loans. And so he got a free round of golf. He asked me a great question. He said, okay, just general advice, quickest way to make $1 million. How do you do that? We're walking up the 16th fairway, and I'm like, leverage people. Leveraging assets is a huge, huge undertaking in building. Like, that's a longer way to get to $1 million. Leveraging people, though, creating a business creating a vision business, their skill set. So now we're all winning quickly. How do you what's your secret to that? Because you identify the best players in town. You've already done that. You always come with a top level team. So is it your personality type? Is it who you're looking for? And you're very clear on the skill sets they have. Like, what makes you put someone in your phone as a future team member?
I forget there's this investment banking story, and it's very quick, but it's like the partner's talking to this new hire, and he's like, look, we only hire PhD candidates. And the guy's like, well, shit, I guess I'm out. I don't have a PhD. He's like, no, you do. We hire poor, hungry, and driven people. And
so they got to be poor?
No,
just
but
hungry and driven?
But if you just take zoom out of it, like that's kind of, you want someone who wants it, who has like internal motivation, like intrinsic to their nature, right? Because as a manager, what you want is someone to want to take the ball and run with it further than you can. And then you just want to get out of their fucking way. And so what's cool about real estate, I found, I'm sure other industries are like this, but people are so hungry to do it that like you identify that fire. You can always train a fucking skill, but you can't train that fucking fire. So that's what you got to find. And I found it to be like PhD candidates.
I like to call it the unteachables.
Yeah.
I like that. Unteachables.
They already have it. 90% of their value they already have. And then maybe you can give them that last 10% of.
Like when I started working at CBRE, the guy who hired me, he's like, everyone else in this institutional industry, they're all, this is fucking San Francisco. Everyone's like, oh, did you go to like Yale, Harvard, or like Berkeley or Stanford? And they're like, oh, how many stock options do you have and all this shit? And he's like, fuck all those guys. Like, I like to hire guys who went to like Sonoma State and guys who have like a fucking chip on their shoulder, who like that's like the hungry, right? They're a little bit poor background. They're fucking hungry to make that, and they're driven to do it. And it's like that's literally what you hire for. There's like that fire inside, the chip on your shoulder, whatever you want to call it.
I went to Chemeketa.
It's not even how you say it.
I didn't even get into Chemeketa.
How do you say it?
Like that.
Oh,
Yeah, how Mike did.
how'd you say it?
Chemeketa.
I had to drop out because I had 2 kids by the
It's
time I was
not
19.
Chemawa. It's
I said
Chemawa.
Chemeketa. Actually, we called it UCLA though, University Chemeketa, Lancaster Avenue. I think
Whatever makes you sleep better at night.
what do they call that when they make you like a professor for just going out?
Adjunct.
Adjunct.
Mhm.
They should make me an adjunct professor at Chemeketa for the real estate program.
I've talked to a couple of universities. I talked to PSU when I was living in Portland about doing that because I have a master's in accounting, and so I can become a professor with a master's. And we were working on that. I feel at some point I'll probably end up doing something like that.
It'd be kind of fun, wouldn't
That'd
it?
be super cool because most of the professors don't actually know real estate. So funny story.
No, Portland State's MRED program
They
is
have
really good.
Pretty solid.
Yeah.
No.
yeah.
Me and Dane were trying to meet a bunch of people in the industry, and we're like, okay, who would know a lot about real estate? Probably a professor of real estate, and they would think what
You
we're
just
doing
went
is
the
pretty
wrong
cool.
one. You just
We
went the wrong
emailed
one.
the PSU ones, the OSU ones, and all them, and we're like, hey, this is what we're doing. We'd love to talk to you, see what you think about this. And they're like, well, we teach the real estate, but we don't actually like
Own any.
No.
own or do any of this. And I
so-
don't know if it's the wrong person, but we were like, that's really
The
weird.
owner of Spect was a professor there for a while. Like a lot of the owners of the big development companies in town have taught some of those courses.
So there was a few. So Larry, what's his name? No. The dude at Willamette who owned like a multi-billion-dollar company, and he was sitting in our backyard in Salem for 15 years. Larry Etner. Yeah, this dude was insane. Like he was just at Willamette. Like you didn't even know you've been here the whole time, and he was just at Willamette on this multinational company, and he would fly in on his private jet once a week and teach at Willamette. And he was just in our backyard, and no one knew. But
It's cool. So, what'd you call it? PhD. Poor, hungry,
And driven.
driven.
Mhm.
That's how you hire. That's what you look for in somebody when they want to come work for you.
Yeah, just that, and like yes, yeah, effectively, and it doesn't need to be all of that. And I mean, poor has this negative connotation, and I think that it's more like that chip on your shoulder.
It's where you fit on the privilege scale is really what it is. Everyone has someone else they're looking
relative
to
privilege
yes.
scale.
Yes.
Right? Yeah.
Well, Bob likes to pay $8 an hour for architects, so they have to be kind of poor.
Don't go inside our buildings.
Oh shit! Did it supposed to have a sprinkler system?
Is that a load-bearing wall?
I think they forgot a Simpson bracket.
She's an architect, not an engineer.
Oh, we're good, man. It's just lines on
Yeah,
paper.
life safety. We're fine.
Lines on paper never hurt anyone. Okay, what do we're gonna wrap this one up here pretty quick. Is there anything we want to get? We're gonna come back.
we're gonna come back and talk about some more deals.
Okay, I'm gonna let Dane take my mic and come back and are you guys gonna talk about his bad deals or are you gonna talk about good deals?
Well, he only does good deals. We're gonna talk about good deals.
Yeah,
Right?
I already
That's
talked
not
about
very
that.
fun.
I
What kind of deal junkie are you if you're not out losing money? Come on, Bob.
That's like, isn't that like the Warren Buffett ethos? Like, out
Yeah,
of
but
everything, don't fucking lose money.
It's rule number one. Then see rule number two. See rule number one.
I'm pretty sure he's broken
He's
that rule
lost
before.
plenty of freaking money.
I mean, I
In
guess
a deal,
if you didn't have
in a
to sell,
vacuum.
value goes
Yes.
down. You don't have to sell. Like Bob said, if we had to sell today, we'd lose money on this deal. Well, you haven't lost because you haven't.
Yeah,
sold.
people need to learn what unrealized losses are and stop saying banks are gonna fucking fail. An unrealized loss is a-okay.
As long as you
Unless
can
you have to
hang
refi. Well,
Yeah,
the
yeah.
unrealized loss is there.
Well, that's a maturity. That's a debt thing. I like the vacuum of an unrealized loss is okay.
Wow. Well, this I'm mind blown. Thanks so much, Bob, for sharing your story with us. And I already feel like I know a lot more than I knew before I walked in here. So we hope that everybody listening is enjoying this podcast. We're the Deal Junkies. Please share us. I think we have 2 fans now.
So no one's taking me up on the free coaching.
Oh, yeah, free coaching. Mike is offering free coaching for you to share this podcast and tag Mike_Rarebird or Rarebird
at
Mike.
Well,
that's probably why nobody did it. It's because we can't even tell them how to do
Rarebird _Mike
on
What?
Instagram.
or tag Deal Junkies.
At Deal Junkies, yeah. Instagram
yeah.
at Rarebird
Rarebird
_Mike. Okay, tag Mike, share this podcast, and you're gonna. What are you gonna give him?
An hour of free coaching.
An hour of free coaching.
How much is that worth, Bob?
Or if you're a single lady, he'll take you on a date.
It is priceless.
Ego stroker. I love it.
Oh, Trevor's trying to get you to go on a date too.
Or if you're a single lady, Mike will take you on a date.
Mike is eligible bachelor #1.
You guys do not want me to be a bachelor anymore. I don't know why.
All right. We're gonna rein it in. Thanks for joining us. We will see you next time.